All right, everybody, here is the 0DTE trade on SPX for March 30th, 2023. Overall, it was a good trade. We did get our target 2% for the day. The premiums were a little bit lower. I was able to get $30. Some members got $35, and it was a zero point zero 0.07 delta, so slightly higher delta than we sometimes use. And we're able to only do the put credit spread to return that 2% target amount that we're looking for. With the VIX being lower and below 20, premiums will be a little bit less than what they were most of the year, but as you'll see, we can still get a good return off it. We're able to go pretty far out of the money looking at the previous day's data on SPX and then comparing that to what the market was doing at open, and then we still made a relatively safe trade that made our target return. So let's get right to it. All right, everybody, in the trade for 0DTE at 9:13, we did a 4,003.990 put credit spread. SPX at the time was at 4043, and we looked at the previous day's results to make a good strike price that made adequate premium. PCS means you're going to sell the 4,000 put, and then you're going to buy the 3990 put, which makes it a $10 with spread or $1,000 in buying power. So the goal is to get at least $30 in the trade. And I was on paper today, but we were able to do an OCO order. An OCO, we're going to do one, we'll cancel the other. We're doing a stop order at 0.9, so $90. If it did stop, it would have been 90 minus 30 or $60 loss. Or we could buy to close it at $5 just to get out of the trade. And if it turns against us again, you don't have to worry about it. The commissions are about $5 for just a put credit spread or call credit spread with SPX. So we're looking for 30 minus 5 in commissions is 25 minus 5 in the buy to close. So looking at $20 gain. $20 over $1,000 is a 2% return. Now if you look at SPX for the day, look at the previous day, it did gap open from the day before, and it gapped open at the 4,000, and that was exactly where we sold our 4,000 strike price. It was a pretty big uptrending day yesterday. Today we also gapped up, waited for the market to settle a bit, and there's a 15-minute chart here. Let's go down to like the 5-minute chart. Around 9:15, around here, we decided to sell the call credit spread because it pretty much opened at the same as the open was pretty much the same as where we entered the trade. And then hovered around, didn't close here, started to go against us a little bit, but we were actually never beyond the initial $30, $35 that we took in. I know some traders took $35 today. And then we were able to close it out after lunch on this big upturn at $5, which gives us that about 2% return for the day. Doing this consistently over and over again will show good results over time. Right now, we're at a 38% win rate, so a 38% gain on our total account with this strategy for the year. That does include some of the stop losses. It does include commissions. So able to get good returns, just going slow and steady day after day with a pretty high win rate, being able to manage your trades carefully, all very important things in order to do well with the strategy.